The day you make your final mortgage payment feels like it should be the happiest financial moment of your life. You imagine relief, pride, maybe even a sense of victory. After years, sometimes decades, of discipline, you finally own your home outright. No bank, no monthly obligation hanging over your head. Just freedom. But here's the part no one talks about. For many people, that moment doesn't feel like freedom at all. It feels strangely uncomfortable, quiet, even unsettling. The structure that once guided your financial life suddenly disappears, and with it, something deeper goes missing. The very system that forced you to stay disciplined, to earn, to plan, to push forward, is gone. And in its place, there is space. Too much space. So instead of celebrating, many people begin to feel a low, persistent anxiety they can't quite explain. What now? What replaces that monthly target? What keeps you sharp when there is no longer a deadline tied to your survival? And more importantly, what if you lose this? What if something happens and the safety you worked so hard to build slips away? This is the hidden psychology of living mortgage-free. It's not just about money. It's about identity, structure, and the way your mind reacts when a long-term burden disappears. In this video, you're going to understand why financial freedom can sometimes feel like psychological pressure, why some people lose motivation after paying off their homes, and how to shift from a debt-driven life to a purpose-driven one. Because the truth is, being mortgage-free doesn't automatically mean you're mentally free. You have to learn how to handle that freedom, or it can quietly turn into fear. Let's start with the first hidden shift that almost everyone experiences, and that is the loss of forced discipline. When you have a mortgage, your financial life is structured around a non-negotiable payment. Every month, no matter what, you must show up. You earn, you budget, you sacrifice because the consequence of failure is clear. This creates a powerful system. It forces consistency. Think about someone named Daniel. For 15 years, he built his life around paying his mortgage. He turned down vacations, worked overtime, and avoided unnecessary spending. His entire mindset was built around one goal: get free. And then one day he did. The final payment went through. At first, it felt incredible, but within a few months, something changed. Without that monthly obligation, Daniel started relaxing his habit. He told himself he deserved it. A little more spending here, a little less saving there. After all, he had made it. But slowly, his financial discipline began to fade. Not because he became irresponsible, but because the external pressure that kept him focused was gone. This is the first psychological trap. When the system that forced your behavior disappears, you must replace it with internal discipline. Otherwise, your progress can stall or even reverse. The practical takeaway here is simple but powerful. Before you pay off your mortgage, decide what will replace it. Create a new payment to yourself. It could be investing, building a business, or saving for future goals. The key is to keep that structure alive. Without it, freedom can drift into complacency. Now let's move to the second hidden shift, and this one is even more subtle. It's the fear of losing what you've built. You would think owning your home outright would eliminate financial stress. In some ways, it does, but it also introduces a new kind of fear. When you owe the bank, part of the risk is external. When you own everything, the responsibility becomes entirely yours. Imagine a couple, Sarah and James. They spent 20 years paying off their home. When they finally became mortgage-free, they expected to feel secure. And they did for a while. But then a new thought started creeping in. What if something happens? What if there's a medical emergency, or a job loss, or an economic downturn? Now, instead of focusing on paying off debt, their attention shifted to protecting what they had. This is where many people become overly cautious. They avoid taking opportunities. They hold on to cash too tightly. They stop growing because they are afraid of going backward. The irony is striking. The very thing they worked for, security, becomes the source of anxiety. The lesson here is that ownership changes your mindset from survival to preservation. And if you're not careful, preservation can turn into stagnation. The practical move is to redefine risk. Instead of asking, "How do I protect everything?" start asking, "How do I grow without putting everything at risk?" This shift allows you to stay active, to keep building, without feeling like you're gambling your entire future. Now let's talk about the third shift, and this one goes deeper than money. It's the loss of a clear mission. For years, your goal was simple and powerful. Pay off the house. That goal gave your actions meaning. Every sacrifice had a purpose. Every decision was connected to something bigger. But once the goal is achieved, that sense of direction can disappear. Think about athletes who retire after reaching the top. Many of them struggle, not because they lack success, but because they lose the structure that gave their lives meaning. The same thing can happen with money. When the mortgage is gone, the question becomes, what are you building now? If you don't answer that question, your motivation can fade. Days become less intentional. Financial decisions become reactive instead of purposeful. The solution is to create a new mission before the old one ends. This is where you transition from a debt-focused mindset to a wealth-building mindset. Instead of asking, "How do I get out of this?" you begin asking, "What do I want to create?" That could mean building investments, supporting your family in new ways, or designing a life that reflects your values. The key is that your money now serves a vision, not just an obligation. And that shift requires conscious effort. It doesn't happen automatically just because the mortgage is gone. Now here's where everything starts to come together, because living mortgage-free is not the finish line people imagine. It is a transition point, and what you do next determines whether it becomes a foundation for growth or a quiet source of stress. The fourth psychological shift that often appears is something very few people expect, and that is the identity gap. For years, you saw yourself as someone working toward freedom. You were the disciplined one, the person making sacrifices, the one staying focused while others spent freely. That identity gave you a sense of control. But once the mortgage is gone, that version of you no longer has a clear role. So the mind starts asking a strange question. Who am I now if I'm no longer chasing that goal? This is where some people feel lost, even though nothing is technically wrong. Let's look at an example. There's a man named Robert who spent most of his adult life paying off his home early. He built his identity around being financially responsible. His friends admired his discipline. His routines were predictable. Every extra dollar had a purpose. When he finally became mortgage-free, he expected to feel complete. Instead, he felt disconnected. The habits were still there, but the meaning behind them had faded. He wasn't working toward anything specific anymore. And without realizing it, he started filling that gap with random spending and short-term distractions. Nothing extreme, just small choices that slowly drifted away from the values he once held. This is the identity gap in action. When a long-term goal defines you, its absence can create confusion. The practical way to handle this is to consciously redefine your identity before the old one fade. Instead of seeing yourself as someone escaping debt, begin seeing yourself as someone building wealth, creating options, and designing a life with intention. That shift may sound simple, but it changes how you make decisions every day. It gives your actions direction again. Now let's move to the fifth shift, and this one explains why some people actually slow down after achieving financial freedom. It's the comfort trap. When pressure disappears, comfort expands. And while comfort feels good, it can quietly reduce your drive. Think about it this way. When you had a mortgage, there was always a reason to push harder. You had a target. You had urgency. But once that pressure is gone, it becomes easy to settle into a lifestyle that feels safe but lacks growth. Consider someone like Lisa, who paid off her home in her early 40s. For years, she had been highly motivated, always looking for ways to increase her income and improve her situation. But after becoming mortgage-free, she found herself slowing down. She stopped pursuing new opportunities. She became more selective with her effort, which at first felt like balance, but over time turned into stagnation. Her income plateaued, her investments slowed, and her overall progress became flat. This wasn't because she lacked ability. It was because the urgency that once fueled her had disappeared. The comfort trap is dangerous because it doesn't feel like a problem in the moment. It feels like relief. The way to avoid it is to replace external pressure with internal standard. Set new goals that excite you, not because you have to achieve them, but because you choose to. This is where true growth begins. It's driven by intention, not obligation. And that kind of motivation is far more sustainable over the long term. Now there's one final shift that ties everything together, and that is learning to handle freedom itself. Most people spend years preparing to pay off their mortgage, but almost no time preparing for what comes after. And freedom, when it arrives suddenly, can feel overwhelming. Without structure, without pressure, without a clear next step, the mind searches for something to hold onto. This is why some people become overly cautious, while others become careless. They swing between fear and overconfidence because they haven't learned how to operate in a state of freedom. The real goal is balance. You want to enjoy the space you've created without losing the discipline that got you there. You want to feel secure without becoming stagnant. You want to keep growing without feeling like you're risking everything. And that balance comes from clarity. You need to decide what freedom means for you. Is it time with family? Is it building something meaningful? Is it creating financial independence beyond your home? When you define that clearly, your actions begin to align naturally. You don't drift because you have direction. And that brings us to a deeper reflection. Owning your home outright removes a financial burden, but it also removes a structure that shaped your behavior for years. What replaces that structure will determine your future. If you replace it with purpose, growth continues. If you leave it empty, uncertainty fills the space. The house may be paid off, but your mindset is still under construction. And that is the part most people ignore. The people who truly benefit from being mortgage-free are not the ones who simply stop paying. They are the ones who consciously evolve. They shift from being driven by necessity to being guided by vision. They understand that freedom is not the absence of responsibility. It is the ability to choose your responsibility. And once you see it that way, everything changes. You stop asking, "What do I do now?" and you start asking, "What do I want to build next?" That question opens a completely different path. A path where your financial life is no longer controlled by a lender, but directed by your own decisions. And that is where real independence begins. If this made you think differently about financial freedom, take a moment to like the video and subscribe to the channel. And I want you to answer one question in the comments. If your mortgage disappeared today, what would you build next? Please note, these videos are for entertainment purposes only and do not constitute financial advice. The content you just watched is educational in nature, inspired by the publicly available teachings, writings. It does not constitute professional advice. Before making any major decision in this area, please do your own research and consult a qualified professional.